Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago in the home office here this morning. And joining me today from way down in Atlanta, Illinois, our Director of Buyer Relations and good old boy from Illinois, Mr. Verl, no doubt Prather. Verl, how are we today?
Doing good down here. How are things going up in Chicago?
Things are okay. So we're recording on Thursday morning. It's a little rainy up here. It got a little cooler. You know, I know it's May 1st, but it feels like we took the clocks back a couple weeks to mid-April. Walking with umbrellas to school this morning, all that jazz. But, you know, Verl, we're going to be talking about this a bit. It's not a heavy rain, nothing to maybe slow things down in terms of what we're going to discuss later. What about down by you in Atlanta?
Yeah, we got some moisture overnight as well, which is good. I think some of the corn that was planted before Easter weekend would like to see it. Some of that ground had started to crust over a little bit from what we've heard.
Yeah, I'd say everything we're getting east of the Mississippi has all been very welcome moisture while we're getting it. And of course, west as well. But we'll talk about that in a minute. No spoilers for the audience out there, because first page, we need you to kindly timestamp the broadcast because it is Thursday morning. We've switched schedules up just a little bit today on the grain feed. It is about 9:10 a.m. Chicago time. Just a quick look at the live markets here. We do have July corn is down about a penny, down near 474.5. We had December futures up just a tick at 446.5. We have July beans down, let's say 2 cents at 1042.5, and Novi beans down about 3/4 cent at 1017.5. And good old soybean meal, that not as stubborn a little byproduct. We have July down 260 at 295.40 per ton. And good old December Christmas meal down 140 at 302.40. So December still holding that 300 level for a minute now for soybean meal. But we have faith for those of us that are buying protein and feeding those animals. We can maybe test and break that good old $300 level for new crop December meal. But Verl, before we can even think that far ahead, I threw out Christmas meal, Verl. That's what we used to say on the trading floor when we talked about December futures. To clarify, you'd say Christmas, December Christmas corn. But it's May 1st, Verl. We can't get too excited about Christmas just yet. We can't get too excited. And we got to talk about how we're going to make these grains and make this protein. And right now, as we started on the call here, it's just getting into the ground now for some folks. It's been in the ground for maybe a week or two for others in the I states. And we talked about some of the rain we're getting here, Verl. So, I mean, is this rain mostly welcome? Is it going to slow down the planting pace? And even if it does, are we happy to get some moisture depending on where we sit? What are your thoughts?
As you kind of alluded to, planting progress has really come along pretty good so far, especially if you look west of the Mississippi, over like the east side of the Mississippi, where, the preferred side of the Mississippi, if you will, has had a little bit drier of a streak over the last week and a half or so. And a lot of progress has been made over here as well. And you can really kind of tell by the basis values that some of these processors are floating out there currently, where west of the Mississippi had a little bit more moisture. They were kept out of the fields there for a bit, and the processor really weakened up on their nearby basis. Whereas over here, central Illinois basis had gotten even stronger, just as, a fact of the matter that producers are plenty busy in the fields. To your point, though, this moisture is well welcomed. We're continue to see similar as to last year on an operation, like an individual operation basis, wide variance in the amount of progress that folks have made. But all in all, the nearby weather forecast for the first half of May really tends to look favorable for planting progress. And I think there's more and more confidence that this crop's going to get into the ground in a fairly timely manner.
Yeah, and I think Verl, talk about. I mean, I agree 100%. The obviously the favorite side of the Mississippi is the east side of the river. We talk about the folks on the other side of the Mississippi, and that was kind of the dry focus for quite a really. It felt like a few months. I mean, as we were coming out of winter, I mean, like we look back towards even February. We were seeing some pretty significant strength in the corn market. There were a lot of trade issues and concerns starting to bake into this, maybe an inflation hedge by the funds. You were starting to like not quite have some relief in Argentina yet. And so things were starting to build. And really that western part of the Mississippi, you look at a drought monitor map back in February, March, even the 1st of April. I mean, you saw some orange and red west of the big river. It's been mostly white with some yellow. So again, things have been mostly okay here, but what a difference that drought map makes is that Iowa mostly looks like it's in pretty good shape. Obviously, I'm sure we'll have some folks reach out to us, telling us otherwise, but I think for the most part, it's looking pretty good. You start stretching further west in Nebraska, maybe that's still a little bit brighter red. But this has been a pretty favorable pattern, and we continue to see, let's say, some pressure or very limited gains if we have them in the new crop corn and bean market. So really, really interesting pattern that we've had. Obviously, it's still too early to talk about whether we're going to reach down to $4 or make our way back to 5. Maybe we'll ask that question later on. But in terms of the planting progress and some of the weather looking forward, as long as prices sit where they are at the moment, and perhaps even regardless, what's the demand situation for corn? Because it's felt like the export program has remained pretty strong. It feels like the ethanol program, maybe with some seasonal pullbacks, though, we continue to grind. So what are you seeing from the demand side of this?
Yeah, that's exactly right. I mean, exports have kind of continued to, on a seasonal basis, be very strong, and that's certainly something that we need to pay pretty close attention to in the weeks to come. We're just about 10 days away from the next WASDE report here in May. It is going to be our first look at the estimates for the 25-26 balance sheet. So a lot of data is going to be on this report to kind of work our way through. I do anticipate the USDA raising the demand number for exports or potentially ethanol as well. If you remember back in April, they did not touch the ethanol number, and ethanol is ahead of schedule by about 80 million bushels or so at this time, and continues to kind of, unseasonally be really strong. I mean, this is a time of the year where, the planters are out in the field that we tend to see more and more of these ethanol plants take breaks and do their maintenance that they've had planned. But sure, we're seeing some of that, but not nearly as much as we've seen kind of in the past few years. So yeah, I think exports and ethanol are very, very strong for corn. We should be watching closely those demand numbers to see if there's any changes by the USDA. And then additionally, traders this week are kind of anticipating that we may see some more headlines, of course, and headlines have kept this market very volatile over the last few months. But there are some ideas floating around out there that we could see some trade deals pop up here in a fairly short manner with other countries.
Yeah, very important to think about, Verl, is yes, we're currently in the battle, if you will. We went after some folks first and kind of seeing what people come back with in terms of that trade policy. We talked about at length, I think, with for the corn market, very dependent on Mexico and its demand. Things seem to be okay there, but the soybean market, despite lower projected planting in terms of its acreage here in the U.S., and of course then a tighter balance sheet, but we're seeing that those prices for at least beans remain under pressure, closer to $10. And I think, right, some of those trade discussions, or at least the lack of progress from our larger soybean buyers, and mostly China here, until we see some life out of that, we might remain under some pressure. But as you said, Verl, I mean, that can change quickly, right? So, I mean, there are opportunities out there to have something negotiated and have this thing pop back up a little bit. Just be really interesting to see how that works out with the South American harvest and its crop hitting the export market and things largely being in good shape down there. So it'll be interesting to see how the timing there works out. And I'll say, Verl, to your credit, talking about May WASD coming up, talking about the old crop balance sheet, you have been presenting the data to the team internally, to our clients, talking about that corn export pace. With what you've given us and have talked to us about, the USDA would have every reason to raise export demand for old crop corn, right? And you've been very adamant about that and showing us that data. So, I mean, that should not come as a shock to folks if we do raise that old crop export number. And as you said, even that ethanol number, right? There could easily continue to raise demand a bit and further tighten that old crop balance sheet. I think then what folks have to debate is the new crop balance sheet coming in. If everything looks okay, is it enough to provide significant support to the marketplace? So time will tell. We'll see what's happening on that report as it comes out. But as I alluded to, Verl, let's just borrow from the Dairy Download with Kathleen and Phil here just for some bold predictions. But we're trading Deese corn, Christmas corn, at $4.47 today. Bold prediction from you, Verl. What do we trade first? $5 December corn or $4 December corn? Or I'll give you the third option. Do we trade either of those? Because this market just continues to feel range bound and compressed. So we'll give you the out if you'd like it. You can take the out if you need it. What's your bold prediction?
Ooh, yeah, I don't know. Being somewhere right in the middle might make sense here. I think we could go up and potentially test $5, especially with some sort of weather story this summer, but I'm not real confident that we're going to touch it, to be perfectly honest. I think $4 comes first.
Yeah. And like you said, bro, I mean, it is a bold prediction for a reason because it is May 1st. And even though things can look pretty good right now, that can change pretty dramatically. So, I mean, if you are buying grain, if you are buying corn and looking at that new crop December market, I think as long as we trade below 450, you have some opportunities to at least protect yourself from those upside weather risks because we know they're there. We know they'll come to us. How many times do we kill the corn market, Verl?
Oh,
We kill this crop 3 times, 4 times?
yeah, 2 or 3 at least.
We got to kill it at some point here between now and I'm sure the 4th of July. So we'll get there. I'm going to ask you November beans, Verl. It's not as much an either or, but the chances that we trade and maintain a below $10 Novi bean level, what's your confidence there?
I think we're getting slimmer. I think we've given this market a ton of opportunity to trade below $10. And honestly, I think that's going to have ramifications on the amount of acres that are put in within the US. Obviously, we've got the threat of a big South American crop on our heels here. But at the same time, right, I mean, if you look back to previous trade wars, 2018, 2019, yes, we had export numbers that were lower than our current 24, 25 export estimate, but not by as much as most would probably think. I mean, you're talking 150 million bushels shorter on exports. So you could potentially add that back to a 300 million or so, and we would definitely have a lot more buffer than we've got at this time. But I'm still not necessarily convinced that we could hold below $10 for any extended amount of time.
Yeah, I think that is a very fair assessment. I mean, I think almost regardless of how you feel about beans moving forward here, I feel it'd be very difficult if you've been on the sidelines and you did not have a position in November bean futures. It'd probably be pretty difficult to step in and just start selling this thing, right? Like you said, the balance sheet is tight. We may have some of a self-fulfilling prophecy, if you will, in terms of the planted acreage on beans continuing to potentially diminish just because of the pricing situation between corn and beans. So if we make our way into the end of June when we get that updated planting report from the USDA, which gives us that next projection on what we did plant to their best guess, you could maybe not be surprised if they lowered that bean acreage number further. And you could easily argue $10 should be that support level for that pricing. Again, with throw in some weather issues, and I think you've got some upside opportunities in that bean market for those that are planting beans out there. So how does that impact meal? In the protein market for our folks feeding protein, to be seen. It still feels like the bean oil market and the bean market are the two that are somewhat connected these days, and meal remaining largely under pressure with the strength of bean oil. But if you start to mess with the formulas of the soybean complex enough, who knows? And I think the protein situation is the same. It's hard to sell this thing down here. Probably some really nice opportunities to step in and own and or protect some of that new crop protein purchases for those dairies out there. So, Verl, with that all being said, we appreciate the bold predictions. We appreciate you being on the grain feed. Thanks for joining us today, Verl.
Thanks for having me back.
It is our pleasure. We'd also like to thank the Everag Insights crew for their support. Thank you to Paige for production magic, and thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the grain feed.